We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. This is a sector alert video. The reason why I want to make this video because I want to go on record because I believe the sector is about to move and it's going to become significant. So it's just a matter of wait and see now. I think we're very close. Now, I remember someone saying what would bring this house of cards stock market down, and he said, quite surprisingly, economic success. What that basically means is the economy warms up, the GDP goes up, the economy heats up, and like any economy that heats up, they have to raise interest rates to cut and, counter inflation. Because you can't. If once the inflation genie's out of the bottle, things get rather bad, I might say. So so he said, well, when the economy success comes along, interest rates have to follow it higher, and therefore higher interest rates on massive debt, because it's going to create some serious problems. And as we know, the US GDP is creeping up to 3%, where it's been at 2% for many years, so it's actually happening. And the other point to note is that in Europe, believe it or not, the corporate bond yield is less than the 10-year yield. So here's the US 10-year yield on the chart at 2.3. The corporate bond yield is below 2. This is the junk bonds, it's below 2. And also the ECB are buying 7 times the amount of issuance of corporate bonds. So what that basically means is when new issuance comes along, they're actually buying the corporate bonds that are already in existence of the other holders. So they're pretty much soaking up every corporate bond they could buy for whatever goddamn reason to keep interest rates for the corporate bonds low at 1.8. When quite frankly it should be at least 4 or 5 or 6. So that's just crazy. So there's a lot of crazy stuff going in the bond market. So like I said before, interest rates rise to curb inflation because nobody wants to own a bond when they're losing money. So rising in interest rates with massive debt and debt problems around the world is the fuse that lights the dynamite. Now saying that, everyone's buying the hedge, and the hedge is obviously gold and silver. Well, I say everyone's buying the hedge, they're accumulating the hedge because it hasn't taken off yet. I believe gold and silver stocks on the back of gold and silver metals, because they're so poorly priced, they're going to take off. Now the reason why I'm doing this video now is because as I'm a Wyckoff enthusiast, things are getting rather interesting. Now I click my symbol list charts and I get this list of charts from the scan. So here I've got all my gold and silver charts. Now just refresh some Wyckoff knowledge. I go to my remind me box. I'll scroll down to my accumulation chart, which is about here. Now here's my accumulation chart. We get I'm looking for this action at the end here. We've had some accumulation of some higher highs near resistance, and then we get a sudden sharp bust down, a terminal shakeout to a spring, maybe a little double bottom. What that does is it smashes down from resistance to support, busts all the stops, scares out all the weak hands just before the move takes up, because there's a lot of accumulation going down here. And on gold stocks, as you know, 10 to 15 to even to 20% moves are nothing, but that just scares the children out. So they're moving the price up and down just prior to the big move. Now this has happened before, just before the big rally before. Let me show you. So I'm very interested in what I'm seeing. For example, here's ABX. Now ABX is a very important stock. It's because it's a major weight in the GDX ETF. I think it's about 10%. Now we've had a big move up here, taken off, big accumulation, big volume, as you can see, from $6 to $22. Some sell-offs, a bit of a bump, bit of accumulation going on here, some sell-off here. Now we've had a fall from the resistance of $18 down to 14. Okay, now that's a sharp, fast move. For someone here some people here might have $100 million worth of ABX. They've sold 30 million, hoping to buy back 40 million. That's what that's about. They're trying to bust stops. They use 30 million to get it down, and they end up buying $40 million back. And what it does, they've seen some stop levels down here, seen some weekends. They might even take it down to 11 here just to bust some stops. But on a Wyckoff point of view, we've seen the big strong build up. We know there's big demand down here. So unless silver's going to collapse to $9 and gold's going to fall to 1,000, this is just a move to bust the weak hands. And now, the reason why this is important on ABX, because it's a large portion of the indexes, the HUIs and the GDX, what have you. Now, you only see it once in one stock, it's not enough. You want to see it throughout the sector because we don't want to be isolated in our thinking. So we got, it's a bit of a move down there, but nothing too great. What's another important stock that I like to follow? Gold stock. There's one down here I've seen. Oh, here we are. No, that's not it. Here we are. HL, Yalika Mining. Exactly the same sort of thing. This is another important stock. And as you can see here, this move here is happening again here. Very strong support. Very strong support. A smash down to bus stops. It might go down further because it moves really easy. What I'm saying for, I'm not saying go out and invest in this right now. What I'm waiting for is this reaction. That's what I'm waiting for. The reaction on the recovery. This terminal shakeout with a violent spring. Then I know the demand boys are in. And once they see that demand in, everybody else on the trading tables will say, oh, the race is off. They started the 100-meter sprint and now it's on the move. So that's what we're waiting for. Look at the important stocks. So this one here, HMY, Harman Gold, and this is look at the stock. It went from 50 cents all the way up to $4, and it's back down to $1.05. It's had the same sort of thing, a bit of a bust down there. Watch for a double bottom down there. Another gold one is having a bit of a shakedown here. And there's another one here. This is another important stock. A very, very capable Pan American Silver. Look at that. The volume has just gone and died. That is a signal all on its own because we've had big bullish activity, some neutral balance, some accumulation, some selling down to accumulate more. All these spikes up here accumulating, hitting the market and buy some stuff out. Now it's just tumbled on down to no volumes. What that tells me that whatever's going on and whatever's going on and organising their accounts, they've accumulated here, minor accumulates here, some are sold. The activity is done. So after about a year and a half, 18 months of organising their accounts and changing positions, the volume has died down and activity is done. So that basically means is that the party who wants to stand up now and impose their presence on the market, which I believe will be the demand side, will take price higher. Because why? Because it's neutral. The supply side, the sellers, they'll left the building. Look, this one's going to skyrocket. Looks pretty good. Strong move there. What else looking at? Here's another one. SSRM, another silver stock. Once again, we've got this accumulation pattern here. Strong volumes, and it doesn't go down. If you look at this pattern here, we had lots of volume coming in here, but it doesn't go down. That's accumulation. It's bringing price down. Accumulation starts spiking up there, and right at the end, we've got the smash down here, just to scare the weak hands out. See what they can get. This WPM, Wheaton Precious Metals, used to be SLW, a very popular silver stock. Once again, we're seeing the same sort of activity here. Look at that. Nice little accumulation. It starts to smash down in a quick reversal. At the moment, we're at this point here. We're at the point where it goes down in most stocks. We want to see the demand side come up. Now, we might get a little double bottom. We might get a high volume spring with a low volume test. We might get a sharp move up. I am saying watch this sector. Scroll back right up to the top. We're going to put in, we're going to tag ABX. We're going to tag where's the other one? Oh, this one here. This is interesting. And oops. So we're just going to have a quick look at these babies. So this is now this is the reason why these are important is because you haven't got a single stock acting on their own. There's quite a few stocks which are busting down. Gold mining, used to be Brazil Inc. or something. And look at that. All this activity down here. Crazy activity taken from 40 cents all the way up to $2.50. Lots of hoo-ha in the middle. Neutral jostling positions. Looking good. Well, another one I want to add. I haven't got on the list. I better add it here. AG. That's a good one to look at. So I'll just put that on back on. So when you see the big boys trying to bust weak hands, they know a move's coming soon. I know it's seasonal for the market coming into Christmas, but maybe they realise some of the fundamentals actually catching up with the gold and silver market. After all, if you put $100 million into Bitcoin at good old 1,000, 2,000, it's gone down to 7,000. Now you've got 500 million. What are you going to do with it? Keep it all in Bitcoin? No, you're going to take some of it out and buy some of the other stuff that you're going to use for a hedge. Okay, so look at all these stocks here. AG. So once again, it broke support there, just like it did here. Now, it was obviously, to be fair, break support, you might actually have some bad fundamentals. Well, this actually had a bad, I remember correctly, they had a bad financial statement, bad income statement. But look, it's bounced up and secured just above that bounce. So that is bullish. So they know something's coming. Obviously, because higher silver prices make the profit and loss statement very, very good. So that's my warning. Keep an eye on the sector. Keep an eye on these companies here that I've listed. AG, SSR, RM, PAAS, HL, GD, LF, and ABX. These are the ones which I believe may have a very, very good future. And if we get the correct reaction, some strength come in, they're going to do very well. That's my alert. Thanks for watching.